This is News Desk, and we have business now with Emmanuel. Emmanuel, yes. Welcome.
Thank you. How are you today?
I'm well, and you?
Okay, I'm fine, thanks.
Okay, so what is this about the overpricing? There's a bracket by IMF, and government is overcharging us for fuel. Tell us more about that.
Yeah, you know, the Africa Center for Energy Policy is establishing that the IMF has parameters within which developing countries could charge, various taxes on petrol, so that the prices stay within a particular range. But in Ghana's case, the ACEP is saying that government has overcharged, and that for now is charging 41% instead of between 22 and 30%.
That is
way above
too wide,
the IMF parameter. Exactly.
All right, Iman, go ahead and tell us.
All right, thank you. So in business, government will in the coming months turn to Parliament for approval to spend more than what the House approved for it this year. This is because of the continuous decline in oil prices, which is badly affecting government's revenue. Crude oil, for instance, is trading a little over $30 a barrel, the lowest in 12 years. This report is by George Uafe.
Government is hoping to spend 46 billion Ghana cedis, according to the 2016 budget. Of this amount, revenue from crude oil export at a price of $53 a barrel should bring in 2 billion Ghana cedis. However, looking at the way prices are dropping on the international market, government may now have to look at revising its expected revenue from crude oil exports. The commodity, for instance, has dropped to about $30 a barrel today, with projections that it will reach $20 a barrel by the middle of this year. This should mean that the Finance Minister Setekwe will have to quickly go to Parliament for approval to change these numbers and see whether there could be other areas that additional revenue has come in for it to spend or raise more. Joy Business is learning that the supplementary budget could be done before the middle of this year. Sources say the recent development on the world market might make it difficult for government to even meet its revenue target of 38 billion Ghana cedis. Joy Business is learning that this challenge even forced government to impose the recent taxes on petroleum products to help it close the gap of this 6 billion Ghana cedis challenge that has come up.
All right, so all indications that the Finance Minister will be going to Parliament to seek approval for more spending. But still staying in the petroleum industry, in a related development, consumers of petroleum products may not be benefiting that much from the declining prices of crude oil on the international market in a long time. It was initially projected that the current developments on the world market would see prices at the pumps come down. But Joy Business is learning the recent taxes imposed on petroleum products might rather result in higher fuel prices over time.
With the current levies, the tax component in proportion to the ex-pump prices of petrol and diesel are 41% and 42% respectively. Before these levies, the tax component in the ex-pump price of petrol was 21.7%. With these new levies, the tax component in the ex-pump price of petrol is 41%. Diesel, before the new levies, the tax component was 18.7%. Based on these new levies, the tax component is now 41.2% or 42% if you like. LPG, it was 12.6% before the levies. Based on the new levies, is 28%. If you look at the reports produced by the IMF, one of its latest reports was published in 2014, and that speaks to comparative tax shares in the ex-pump prices of petrol and diesel in different countries. The IMF says that for developing countries, the average tax share in ex-pump prices of petrol and diesel ranges between 22% and 30%. And so before these new levies, Ghana was consistent. With these new levies of 33% on petrol and 40% on diesel, in fact, 41% on petrol and 42% on diesel, we are now way outside the developing world cycle.
Also, that was the Executive Director of the Africa Center Energy Policy, Dr. Mohammed Amin Adam, highlighting the various parameters for taxes as to be charged by developing countries on petroleum products. Now, moving on, government's 3-year bond sold yesterday has been undersubscribed. Government was hoping to raise 500 million cedis, but got 426 million cedis worth of bids from investors. The Bank of Ghana, which auctioned the bond on behalf of government, has, however, just took 373 million cedis from investors who participated in the bond sale. Government is expected to pay an interest of 24.75% on the bond. This is a little bit higher than the last bond issued. Well, so that's all for business for now. We'll bring you some more updates at midday.